Good morning. Happy Friday. Good to see everybody. Welcome back to the Daily Grind. I'm your host, Chum Change. This is live and recorded. If you guys have any questions during or after, please leave it in the comments or just in the live chat. Let's see who's here, and then we'll get into today's episode. What we're going to do is just watch a video from Coin Bureau. We have a crypto world, and then, yeah, we're going to go over a few things. So let me see who is here, and then we'll get into it. Mr. Chris Hanley, my man. We have Sustainable Crypto, Andrew Masad, Ovalbore Tech, good to see you, buddy. Chad Wicks, Leo Lustig, Andrew, I just said that. Let's see, Dom G, Dan Ruggs Cypher, what's up, buddy? Mr. Max Voltage, good morning. Guys, by the way, Max Voltage is going to be having like a fundraising stream for some personal stuff. I think it has to do with cancer, so just go over to Max Voltage's channel on Sunday. He's going to be doing I don't know if it's like a 12-hour live stream. I heard it was potentially going to be a 24-hour live stream. It would be absolutely hysterical if he could pull it off, but I don't think he can. So if you guys wouldn't mind, go check out Max Voltage's channel. Actually, you know what? I'll put it in the live chat real quick. If you guys could go like and subscribe. Max is a fantastic person, and he's doing a fundraiser stream, and I think we're going to be giving away a computer or something if he raises how much he wants to raise or meets his goal. Let me share his channel. 1 second. Sorry, guys. Totally not prepared to do that, but I saw Max in the chat and it just dawned on me that he's going to be doing that. Thank you, Patrick Murphy. Beat me to it. God damn it, son of a bitch. Appreciate it, buddy. All right, let's see who else is here. Alvidus, good to see you. Leo Lustig. Let's see. Steven Cicero, my man. Good to see you. All right. Anybody else that I may have missed, I apologize. Rudputs, I saw you there. Appreciate you, buddy. All right, let's check out the market. You know what? These lights should be blue because it's kind of, who knows, in the middle of everything. Let's see. Bitcoin, 26,651. We have Ethereum, just about 1,600. It's like right on the line. Dogecoin, 6 cents. Litecoin, 64 bucks. BNB, 211. XRP, 51. Not too bad. Could be worse. Let's see. Crypto bubbles over here. Man, feel bad for anybody on the week that was into Rollbit or whatever this is. Yeah, Roll Bitcoin. That's down 30.7. Immutable is, what is it, pumped 33.2. Ton up 16.8. Crazy. Let's check out the day. Man, on the day, look at this. This is a rug pull city today. We have Terra Luna over here, or the Terra Classic. We have FTT and Hex all up by 8 to 10%. That is absurd. What is happening in this world? Jeez. Mr. Chad Wicks, appreciate the dono. You're awesome, buddy. Thank you so much for the $5 super chat. I think it's gonna go off, or maybe not. He said Max Voltage was supposed to get 2K from Mr. Keller going on Trillion Capital stream. Did this get paid to Max? That's right. I don't know. I wish I could tell you, but I really have no idea. I heard that, but I didn't hear it come out of Dan's mouth, so I don't know. Anyways, Fear and Greed Index looking like 43, pretty neutral, normal, nothing too crazy. Let's check out the top 10 coins by coin market cap, then we'll get into this. We have Bitcoin, Ethereum, Tether, BNB, XRP, USD Coin, Lido Staked Ether, Dogecoin, Cardano, and Solana. Litecoin still in 15th, Shiba in 17th. Not too bad. Oh, actually, you know what? I did want to mention this before we got into the videos. Bybit, if anybody uses that in UK, the operations from October 1st are no longer going to be available to you. Thank you again, Mr. Chadwick.
Max Voltage Mining and Crypto was supposed to get $2K from Mr. Keller for going on Trillion Cap YouTube stream. Did this get paid to Max?
So much funnier when the British accent comes out and then he just butchers the whole sentence. Well, I appreciate it, buddy. Yeah, I'll find out. I'll find out if he did or not, and I hope he made himself good on it. All right, let's get into this. Let's talk about I guess Bitcoin sinking below 27K after the Fed signals for keeping higher rates for longer. I want to see what Crypto World has to say. I didn't have a chance to watch this all today, so without further ado, if you guys have any questions, again, feel free to ask. Let's get into it.
Today, Bitcoin dips back below $27,000. A crypto-related bill meant to intercept a future U.S. central bank digital currency advances. And Solidus Labs' Hen Arad breaks down the crypto security startup's new report on market manipulation.
Sorry, her mic was a little hot this morning. Didn't realize.
Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices in the red one day after the Federal Reserve's plan to keep interest rates at higher levels for longer. As of noon Eastern, Bitcoin slipped to around $26,500, Ether fell slightly to under the $1,600 mark, and XRP edged lower as well to 51 cents. The Fed deciding in its policy meeting to hold rates steady for now, but also indicating it expects one more rate hike before year-end and fewer cuts than initially thought in 2024. Okay, let's talk about the top stories. Tether has resumed lending out its own stablecoins less than a year after it said it would reduce its secured loans to zero in 2023.
Does anybody like Tether? Be honest in the chat. Do you? I on the Tether on the Tron network is a complete pain in the ass.
That's according to the Wall Street Journal, which noted that the stablecoin issuer's latest quarterly financial update includes about $5.5 billion of loans as of June 30th, up from $5.3 billion in the prior quarter. Tether Holdings confirmed to the Journal that it made new loans. We reached out to Tether, but didn't hear back right away. The spokesperson reportedly said that the company's goal is to prevent any significant depletion of customer liquidity or the need for them to sell their collateral at potentially unfavorable prices, which could result in losses. Tether, which is incorporated in the British Virgin Islands, notoriously does not publish audited financial statements or a complete balance sheet, which makes for an incomplete picture of the company's financial health. Next, the now-defunct crypto exchange Mt. Gox has pushed its repayment deadline by a year. Creditors of the Japan-based exchange, which went offline in 2014, are still waiting to get repaid billions of dollars worth of Bitcoin.
They're still pushing this deadline back? That's hysterical, because that was supposed to be this year, right? Yeah, October 31st, 2023. That's crazy. Now it's going to 2024.
To Mt. Gox trustees, the deadline is now October 31st, 2024. Mt. Gox, which was once the world's largest Bitcoin trading exchange, went bankrupt in 2014 after a massive hack, which led to hundreds of thousands of Bitcoin being stolen. CoinDesk reported that Mt. Gox was able to recover about 20% of the stolen tokens. And finally, a bill meant to restrain a future U.S. CBDC, or central bank digital currency, is heading for consideration on the House floor following yesterday's committee approval. The move marks more progress for crypto legislation in Congress. Republicans in the House Financial Services Committee cleared the bill that Patrick McHenry, the committee's chairman, said, quote, protects Americans' privacy and our financial system from the risks a CBDC would pose. According to lawmakers, the CBDC Anti-Surveillance State Act prevents the Fed from issuing a CBDC to individuals, ensuring it couldn't mobilize into a retail bank able to collect personal financial information. The legislation also states that the Fed and the U.S. Treasury lack the authority to issue a CBDC without congressional authorization.
That's great.
All right, for our main story, Solidus Labs, a company focused on risk monitoring for digital assets, recently released part 2 of its crypto market manipulation report series. This one focuses on wash trades. Crypto World's Talia Kaplan spoke with Chen Arad, the firm's chief external affairs officer, about what was uncovered. He also breaks down exactly what this form of market manipulation is and how it can be prevented.
The second installment of your crypto market manipulation report just dropped last week, revealing $2 billion worth of wash trades on decentralized exchanges since 2020. For those who don't know, according to Solidus Labs, crypto wash trading is when one entity executes both sides of a trade, so buying and selling a cryptocurrency or NFT. When this happens many times, it can mislead investors into believing that the trading volume and market value of a token is higher than it actually is. Now,
you know, they actually have trading bots, by the way, in some of these sketchy exchanges. Who made the video? Max Maher, I believe, if I'm not mistaken. It was a super good video with explaining how these bots will trade back and forth inside their own exchange, even though it's not like actually exchanging any type of crypto. They throw in these trades to make it look like they're trading, you know, a whole bunch between a whole bunch of people, but it's really just back and forth between these two bots, and it makes the exchange look like it's more active than it really is, which is kind of crazy. I'll find the video actually while we're listening to this.
Now, the new report provides data and specific examples of the main types of wash trading methods used by scammers. Can you take us through some of that data? What stood out to you?
Yeah, absolutely. Let's start with some of the headlines in numbers. You referred to some of them, Talia. We identified, looking at around 30,000 liquidity pools in Ethereum-based decentralized exchanges, we identified about $2 billion worth of wash trading beginning in September 2020. So, we looked at data from a few years. to kind of give a few reference points, about 67% of the liquidity pools that we looked at had evidence of wash trading in it. And in total, about 13% of the volume of all of those liquidity pools together. It's important to say this is a sample. 30,000 liquidity pools is a small percentage of all the liquidity pools out there. So this is a sample meant to do a couple of things. Just to demonstrate that wash trading can and does in fact exist in decentralized exchanges. There's a bit of a tendency sometimes to assume or to argue or to claim that because it's on a blockchain, because it's transparent, because there are fees that make it less cheap basically to do wash trading on decentralized exchanges, then it doesn't happen. It's clearly not true. And beyond that, to also show how people actually do it. So to define what wash trading is on decentralized exchanges. And we provide a number of examples. I'm sure we'll get to them.
We sure will. One case study in your report, a group of connected wallets that Solidus Labs said facilitated the wash trading of a meme token called Shiba Farm to collect a profit of more than $2 million. Can you break down how this was carried out?
Mid 2021, when that token was introduced, kind of found its way to the web, and immediately it was important to say it was a hard-coded rug pull, meaning in the smart contract itself, there were elements that basically meant that you could invest in that token, but you would not be able to withdraw the funds. Now, once you deploy a token like that, how do you get people to invest in it? You need to make it look real. Wash trading is a great way for scammers to do that. And that's, we believe, one of the main incentives. With the Shiba Farm example, you can see that the moment a number of wallets started trading between them, and in that case, it also became more sophisticated than that. New wallets were opened that are linked through the transactions to the original wallet and started executing each a number of trades. About 80 to 400 Ethereum was deposited to each of these wallets, and each of them started to execute trades essentially with Ethereum against Shiba Farm. That's the liquidity. That's the liquidity pair in this case of around 5 to 20 ETH, and you can see the money moving between those wallets again, back and forth, which is how we know that they're associated with the original deployer. Ultimately, let's kind of cut to the chase here. In a span of about 2 hours, around $2 million were wash traded. And we can also see that during that 2 hours, around 50 other unrelated wallets invested in the tokens, meaning there are around 50 wallets who were affected or essentially victims of this wash trading. Just a very kind of a great example of how fast these things can happen and how easy it is to miss. And it's also what an effective way it is to attract interest to a token that has no actual value. All of that happened without any actual, real investment in that token.
So true. I found that video, by the way. We could totally watch this instead if you guys would like. This it was really good. A huge lie, and it shows a Bitcoin symbol, and then he talks about the exchanges, if I'm not mistaken, in this video. It's kind of it's super neat. So let me know what you guys want to do. If you want to watch Coin Bureau, you want to watch that. That's I think this video from Max Maher is actually more important than Coin Bureau's, to be honest.
The report finds that wash trading is one of the most common but preventable forms of market manipulation when it comes to DeFi. Can you take us through some of the ways crypto wash trading can be prevented?
Yes. So first of all, the first step with any form of market abuse is to raise awareness around it. And that's what we're trying to do with these reports. As long as, there's the sentiment in the DeFi space that it doesn't happen, that it can't happen, then, it's easier to do because people are not looking for it. We do believe, obviously, because we looked at a small sample, that, there's much more of it in the entire space. But, this doesn't necessarily reflect, to all liquidity pools. We just wanted to point out that it's a very large problem in one place. We often find ourselves in the position where, as a company that's deeply committed to enabling the potential of crypto and DeFi by mitigating these sort of risks, we sometimes have to point out negative things about our own industry. We never enjoy it, but sunlight is the best disinfectant. As you might be able to see, my t-shirt says, You have to be able to define the bad in order to highlight what is good, put a line in the sand between healthy markets with healthy volumes and those that are not healthy, and help begin to solve this. How can it be prevented? I mean, you can see here the kind of hallmark of a market abuse in DeFi. It's in some ways it's easier to do this sort of stuff in a market that is decentralized because it's permissionless. Anyone can deploy a token. Anyone can open new wallets in a sophisticated way that makes it hard to detect. But you can also see the opportunity when it comes to risk monitoring. It's all transparent. All of this is public data, and using the right tools, looking at it the right way, you can you can actually identify it, without necessarily having to issue subpoenas or investigate using private data. So that's part of what we're trying to do with this report, raising awareness. We also are working on providing some publicly available dashboards so that anyone could examine various liquidity pools before they decide to engage with them. That's you can expect that to come soon from us. And also, there's obviously, over time, we also believe, just like, there used to be more market abuse in centralized crypto exchanges. If you look 4 or 5 years ago, the centralized exchanges worked very hard. And today the numbers are much lower. Regulation kicked in. We believe here as well, ultimately, regulators are going to step in to some degree, create some, guardrails. And as a community, we'll continue raising standards. We're obviously working with a lot of decentralized exchanges and the community at large in order to prevent this. So when we say preventable, what we mean is it's on the blockchain, it's identifiable by raising awareness, by improving tools and using them, providing public tools, and by the community working together, we can actually help clean those markets.
Yeah. He was quite boring, but to be honest, I wasn't going to stop it halfway through. I apologize if anybody got bored. But all right, so this is the video that we were gonna watch right here. The financial system is rigged. You need to know the truth from Coin Bureau. He usually comes up with some pretty good facts and points, and that's all well and good. But kind of just to elaborate a bit on what we were just watching with that crypto world. I want to bring this up because this video right here. This is it's so neat. Again, it's from Max Maher. I'm gonna pause this. So Max Maher his channel is actually fantastic. He makes great videos, great content, and he goes over exchanges and how they have fake trades back and forth. I think this is probably a little more
crypto is literally just
a little more important to watch. So we're gonna watch this. If you guys have any questions, you want to stop it, just let me know. But yeah, I think this is a good one to go after, so let's do it.
crypto is literally just made up BS. That's what this man, David Gerard, has to say anyways. And he's not the only one that believes this. Over the past few weeks, I've had article after article sent to me stating that crypto is a lie. And my first reaction is like, yeah, okay, whatever. This is just another hit piece. Who cares? But the more I dug in, the more the arguments actually made sense. And this led me to the question, what if crypto is actually far smaller and shadier than we think? Does this mean any investment here is doomed to lose money? Or is this just a new market working out the kinks? I needed to learn more. If someone asked...
All right, so just want to elaborate. Not against crypto in any way. This is just kind of revealing fake data that is pushed around between exchanges. You guys all know the shady exchanges we're talking about, just in general. There's so many that you can't even count, right? But realistically, the trading volume, there's zero chance any of that trading volume really happens on most of these exchanges. Let's be real. So that's kind of what he gets into here.
Asked you how big the crypto market is, you'd probably just pull up CoinMarketCap, rattle off that big number up top, the total crypto market cap, the combined value of all cryptos. The problem is this valuation isn't perfect. It only reflects the last prices coins were purchased at. If Bitcoin's at 30K, that doesn't mean everyone can sell it right now and get that full $30,000 price, so it's not perfect. But how far off is it? And what else is crypto hiding in the shadows that appears bigger and better than we think? It turns out quite a bit. See, when the recent crypto crash knocked the total market down from 3 trillion to just 1 trillion, people started asking questions. They began looking more closely at trading volumes before discovering most trades were
Fake.
But how is this even possible? The blockchain is transparent. You can look up trades in real time. I was confused too, and that's when I came across this report by Bitwise. The report starts by suggesting the Bitcoin market should be incredibly orderly and efficient, with nearly perfect prices. Yet it's a mess, with huge price differences between exchanges. But why? Well, they saw a daily reported trading volume of 6 billion between Bitcoin in cash or cash equivalents. And that doesn't seem very crazy at first until you see the exchanges that have the biggest volumes, and you realize you probably haven't heard of most of them. The top listed exchanges show volumes in the hundreds of millions daily, where huge known exchanges like Coinbase Pro show just 27 million daily. So straight away, something obviously fishy is happening here. And Bitwise was able to figure out a few key ways to determine if an exchange is faking it. A fake exchange constantly receives matching buy and sell orders. They usually have an equal number of purchases and sales each day. Many transactions are for weird amounts, like 0.053954 Bitcoin. And real world things like the time of day, price movements, and big news events have absolutely no effect on fake exchanges. In short, many exchanges are lying to you. They're empty ghost exchanges where very few humans are actually buying or selling anything. In fact, Bitwise looked at 81 exchanges and only 10 of them had real trading volumes.
Only those 10 out of 81, he said. Look at this. So Binance, Bitfinex, Kraken, Bitstamp, Coinbase, Bitflyer, Gemini, Bittrex, and Poloniex. I don't even know what the hell that is, but that's only 10 out of the top 81 had actually real volume. Crazy.
Had real trading volumes. 10 out of 81. They simply use bots to create action within the exchange, trading against one another. And the strangest part? They don't even try to hide it. It's all right there for anyone to see. To explain the dark reason why they're doing this, let's go to Starbucks. There are about 32,000 locations around the world. Now imagine less than 4,000 of them are real Starbucks with real human customers. The rest are just filled with NPCs who order a cappuccino and hand it back and get a refund. Then they order it again before handing it back again. This over and over again all day long. What this does is make Starbucks look super popular. They can say, hey, look at these numbers. We're selling millions of cappuccinos a day. This may attract investors or act as social proof so real customers decide to try it out because, hey, everyone's drinking it. It must be good, right? And the craziness doesn't stop there. The report also found that the American market for Bitcoin is far larger than we think. For a while, we were operating under the assumption that only about 1% of all Bitcoin transactions came out of the US. Turns out that number is more like 30%. Now, I know what you're thinking. Try fitting that one into your coffee NPC example. And you know what? I'm going to. So imagine we were told that only 1% of all Starbucks are in the US. You'd probably look around seeing one on every corner and think, Jesus, this is just 1%? You'd have to assume there's literally a Starbucks everywhere you turn in China or Europe. But you look back to the total location stat and see that there's 32,000 worldwide. That means there's only 320 of them in the US. That can't be right. We'd all be these caffeine-deprived zombies. So you start counting one by one, and it turns out there's actually 9,000 Starbucks in the US, which coincidentally turns out to be about 30% of the global total.
There's 9,000 Starbucks in the US. Starbucks isn't that good. What is happening? Is everybody here? Starbucks or Dunkin's? I'm gonna put a poll in the chat just for shits.
What this does is reframe your mind. Yes, Starbucks or Bitcoin is big, but it's far smaller than it appeared. That's extremely important when it comes to finding the true value of crypto. And this isn't just one single study. Another report found that some exchanges fabricate up to 95% of all transactions. But why would they make this stuff up? Like, sure, it could make crypto look bigger, but what does an exchange gain from lying like this? It's simple, actually. Why do you choose one crypto exchange over another? Apart from a neat logo, a cool name, you want a stable, established place to trade, somewhere safe. So faking these trades first attracts investors and profitable projects like new ICOs. And second, makes it look like there's a lot of liquidity. The exchange looks more reliable. It makes business sense for them to lie. Now, before we go even further down this rabbit hole, I have to quickly tell you about an exchange that you can trust. Bybit, which...
Nope. All right, well, this is where I'm gonna skip over this little shill he's got here, but there is some news about Bybit. For anybody that doesn't know, Bybit to suspend UK operations from October 1st. So crypto exchange Bybit has announced that it will suspend its operations in the UK due to regulatory changes. Starting from October 1st, new customers will not be able to open accounts, and from October 8th, existing customers will have to will have limited functionalities. Bybit's decision is in response to the UK Financial Conduct Authority's new rules on advertising and promotions for crypto businesses. So if anybody uses Bybit in the UK, that's your warning. So that's that. All right, let's continue this. I'm going to skip over his little ad here if we can. I don't want to go too far. Hold on. I think. All right, here we go. It was kind of a funny ad though, but not worth playing on the channel. Okay.
Back to the market cap problem. This impacts everyone. We were told that the total crypto market cap at its peak was about $3 trillion, but we're finding that that figure may be based on nothing but hot air. The problem is no one agrees to the actual trading volume or the market cap figures. The further you dig, the more estimates you find, and they're all different. And that's not because the data is bad, it's due to all these weird gray area questions, like what do you exclude from market cap? Dormant tokens, coins that have been lost forever, those held by nonprofits and foundations, tokens to pay for niche products. It's confusing as if you remove those things, the market cap shrinks a lot straight away. And an even bigger problem is wash trading, which sounds like a perfect time for me to come up with a joke about swapping crypto in the shower, but I could not come up with anything remotely funny. So please comment your best wash trading jokes below and make up for my loss here. Wash trading is when you make a financial transaction, but the ownership never actually changes. It's buying an asset off of yourself while pretending a third party was involved. It's nothing new. It's been illegal in the stock market since the 30s. But the fact
that they were doing that bullshit with NFTs, by the way, you'd end up selling it so somebody would have custody of this newly minted NFT or picture, right? They would, I think, was it Trump that got caught doing this, or somebody, or his wife, NFTs or some shit? But anyways, they have two wallets, kind of like, you know, this one, he owns this one and he owns this one, but this one's got the NFT in it. He buys the NFT from this one with a bunch of money, and it seems like that NFT is now worth a whole bunch of money because somebody decided to pay that much for it. So now we can list it for that much money we bought it for, or more than that. It's just, it's absurd, but it's a whole freaking game. So just be aware of that. NFTs are fucking scam.
The fact that digital assets are tricky to regulate means they're ripe for wash trading. Do you remember when Melania Trump sold her first NFT a while back? Well, the 1800 Solana coins paid for it seemed to come from a wallet owned by the people who created the NFT. Some claim
well, this is the video I heard it from because I remembered that clearly.
This was a cover-up for money laundering. Others say it was simply to save face when no one wanted to buy her NFTs.
I don't care.
I think it was probably because she just read The Art of the Deal, but who knows? Either way, Melania has since launched even more NFTs. And while people question the value of this, it came with a wild opening price of $250,000.
Stupid. $250,000 for a set of painted eyes? Are you shitting me? People have too much money. That's what's happening.
So things seem to be working out okay for Melania. But what part did allegedly buying her own NFT play in her future JPEGs becoming so expensive?
Their integrity.
Maybe a lot. If an asset has no intrinsic value, then it's only worth what the last guy paid for it. This NFT I made of my left ankle must be worth $1 million because I sold one of my right ankle last week for $1 million. Wash trading helps increase perceived value. The CryptoPunk scandal is another great example. This thing was purchased for $532 million with borrowed funds, then sent back to the original owner and put back up for sale at double the price in order to make everyone else think it's worth more. And
because it's a scam. It was a scam.
Believe it or not, this isn't technically illegal yet. And the same thing actually happens all the time in the traditional art scene. However, I suspect a good prosecutor could still get you on this, so I wouldn't advise it. Wash trading crypto tokens happens all the time as well. If you want a token to appear more valuable, simply swap it back and forth between wallets, building up trade volume. Do that long enough and people will notice and think the coin is more successful than it really is. They'll want to jump on the bandwagon. This happens with tiny tokens. This happens in exchanges trying to look more credible. And it turns—
Well, you know what? Thinking about that, how many coins or cryptos that you guys invest in do you think this happens to? Like these coins that just completely come out of nowhere and just pump like crazy, right? I'm not trying to call out any individual ones, but you guys know the ones that have recently been, I guess, brought up since Ethereum went proof of stake. There was like a handful of coins that just kind of popped up out of nowhere. They were all like the hot news at the time and then kind of went away. So yeah, it makes you think like, wait a minute, is this why things like this get I guess seen, right, by just random people? It's crazy.
Turns out this happens with Bitcoin. This report states that half of all Bitcoin transactions are fake. Now the question is, does that even matter? It's time to face facts. The crypto market isn't as big as we're told it is. Estimates range from the market cap being pretty good, like 10% bigger than it should be, to as much as 70% bigger. So does this mean that the price of Bitcoin should drop to, I don't know, $3? Probably not. Here's the thing. We need some way to value the crypto market, and market cap, even though it's flawed, is the easiest way. A better method would be to average the buy-in price for everyone. So like, let's say Bitcoin's at $60,000 and the average holder's buy-in price is $30K, then the market cap would be based on that $30,000 figure multiplied by the total supply of coins. However, that's far more complicated. And beyond that, it appears to me that any manipulation that can be done, whether it's by exchanges faking it, wash trades, or any questionable tactic, those really only work in the short term. Like, sure, you can pump some crypto with trade volume, but if real people don't actually begin trading it and begin making real deposits from their bank accounts, then in the long run, things generally equal out. We're in a crypto downturn right now, and current prices are much more in line with what researchers believe the true value actually is. So that may be a good thing. It could mean that right now is some kind of buying opportunity if you believe in the technology long term. As long as we stay vigilant about scams and question numbers that seem suspiciously good, I think we'll be all right. Now from here, I would like to take this chance to entice you to join Fanova.
Oh God, he's gonna shill his own thing, but that video is fantastic. And Max Maher, he does do a lot of good videos, and I understand he's gotta shill his stuff to make money, but yeah, it's it kind of puts things into perspective, right? Thinking about how many coins you've seen that came out of nowhere that just pump, and there's no reason behind it. Like, there's just zero reason behind it. Leo Lustig said, I remember that stream. It was definitely Ironfish where we saw a pump and a dump live. You know what? I do vaguely remember seeing that, but I don't remember exactly which coin it was. It probably was Ironfish though. I don't know. Like, that coin kind of just disappeared and fell off a cliff. But anyways, yeah, so that's what we were gonna watch Coin Bureau. I apologize that we didn't watch that, but I mean, to be honest, it kind of puts me to sleep. So I'm gonna share this in the chat if you guys are interested to go watch this. It might be worth your time listening to it at work if you're not trying to talk and be entertained. But that's pretty much gonna do it, guys. So hopefully you all enjoy your Friday. Hopefully it's payday for a lot of you. I think Gaming with Smokey Dan's payday for you, right? You said every 2 weeks. Last week you didn't get paid. Let's just double check the crypto price. Bitcoin 26,600, Ethereum 1,600. Still looking pretty decent. So again, guys, have a good day. Hopefully you all enjoy your Friday. I will see you bright and early tomorrow morning. It's going to be 9 a.m., not 8 a.m. And until next time, I'll see you guys then. Peace out. I gotta leave you on a high note too. Hold on. I'll leave you on a high note. Totally forgot. Peace, guys. Have a good one.
Yeah, I wish I could roll back time to that old Silk Road. I wanna hold till I can't no more. I'm gonna add crypto to my portfolio. I wanna hold till I can't no more. I got my crypto coming back soon. I'm back in the black too. Secure in the bag. Now I'm feeling like a tycoon. Riding on a Lambo. You can live with FOMO. I've been through the dips. When it's low, I was buying more. Now I got my money on the blockchain. Hodl gang, hodl gang, hodl gang. Can't nobody stop my campaign. Hodl gang, hodl gang, hodl gang. I'ma buy some Bitcoin, hold it like the big boys. Ride it to the moon on my Lambo or my Rolls Royce. Now I got these altcoins, they don't make the big noise, but they make the big rips. Call me crypto cowboy. Now I got my money on the blockchain. Hodl gang, hodl gang, hodl gang. Can't nobody stop my campaign. Hodl backyard garage, solar powered area. Spent a lot of money trying to mine that Ethereum. Boy, I got a habit, I'ma bounce right back. And I'm addicted, I become a cryptomaniac. You see, I got no stocks and I got no gold. I'm all in, all I do is I buy crypto. Wish I could roll back time to that old Silk Road. I wanna hodl till I can't no more. Wish I could roll back time to that old Silk Road. I wanna hodl till I can't no more. I'm gonna add crypto to my portfolio. I wanna hodl till I can't no more.
One more thing before we leave.
You're still wearing your engagement ring, huh?
Yeah.
Yeah?
I'm gonna give it back to him. Do you want it now?
Sure. I mean,
Don't give it back. Well, no, I'm not gonna keep it.
Right?
Here.
Thank you. That's a Bitcoin.
You're still wearing your engagement ring, huh?
Have a good day, guys. Happy Friday. Peace, peace.
Not a security, and you better pack your bags because we're going to the fucking moon. I'm done getting dunked on. Let it rip, baby. After the last 2 drubbings in court, I would say my job is in jeopardy. Actually, I never wanted this bullshit job. Now I am left with a shame name and a booty hole that is quite stretched out.
And I think the SEC's behavior in some of it has been, I don't know, I would say embarrassing as a U.S. citizen.
Bitcoin. Not a security, and you better